Okay, perfect. So today we're gonna go over down payment assistance programs. I'll try to be as quick as possible, but just so you know, I love down payment assistance programs, so I tend to like talk about it more. I do a lot of CALHFA loans, and I used to do a lot of GSFA, which is another down payment assistance funded by the state. Unfortunately, they did do a lot of changes, which I no longer like, I feel like it's not good for my clients anymore, you know? So I tend to go with the CalHFA. The interest rate is much lower. And also, like before the GSFA used to forgive the loans, but now it's an additional loan. So, and you have to pay it every month, just as you go. So you pay your large monthly payment and you also pay your monthly payment on the small loan that you took. So I don't like that about that program. Whereas
Sorry, Melly, was that considered a second or a grant payment?
Yeah, it's a second. Okay. Before it used to be considered a grant. So it was forgiven after 36 monthly payments, you know, of your main loan. And so the second one was forgiven. But now you got to pay your mortgage, and you also have to pay a monthly payment on the second. So that's the reason why I don't like GSFA that much. But I'll show you the benefits of going GSFA as well. There's really good benefits on it. But for my first time home buyers, I'd rather just go with the CalHFA. I'll present both of them because sometimes they want to know, you know. So I'm going to go ahead and share my screen. And let me see. I think this is the one. Okay, perfect. Can you see this? All right, perfect. And then I'll email you the PDF file as well. So down payment assistance, there's so many down payment assistance. We also have the Chenoa, but we'll go with the Chenoa on another day. But there's the Chenoa, and I heard of 2 other new ones. And so I got to get a little bit more info on those 2 new ones. But anyway, so we're going to start. So CalHFA, it's if you go on their website, I put the website over here, calhfa.ca.gov, and I'm going to try to go on there as well, so that way you guys have an idea of what it looks like. But basically on there, you can see what the income limits, because with CalHFA, there are income limits. They're pretty high, but still there are income limits. The income is accounted for the people that are on the loan only. It's not for the people that are going to live in the house, where before it used to be like that, but now it's just income. It's going to be from whoever is going on the loan. So if there's a husband and wife, but only husband is going on the loan, then they're only going to take his income. They're not going to take her income into account. They will take her debts if it's an FHA loan, but they will not take the income into account. Also, there's a lot of marketing materials on there that you can go in. There's also information for home buyers and lenders. And there's this beautiful thing that I call the loan scenario. I love it because it kind of gives you an idea of what the payment's going to be. It kind of gives you an idea of how much money they have to bring in. So this is a pretty cool tool. So I'm going to go ahead and I'm going to go on the website. I'm going to go ahead and share the website. Let's see. Sorry, this is. Okay, new share. There it is.
It's interesting. I see on the website that says find a loan officer.
Yes.
Does
So
that mean they can't provide leads?
yes. So Musab had a question. He's like, on the website, you can see something that says find a loan officer. So basically, it's because those are loan officers that have done about 6 transactions within 6 months, I believe. So they're on the preferred list. So if you close about, I don't know if it's 6 per 6 months or 6 a year, but if you get on their list, whoever goes on the website and your name is on there, they can reach out to you. So yeah, you can get leads from there as well. Are you able to see the CalHFA website? You see this? Okay, perfect. So what I wanted to show you guys is there's home buyers and there's also lenders, real estate information on here. Here's the loan scenario. So here also, it's going to tell you what the review time is. So like, it's going to tell you if, what date they're reviewing files from. So right now they're reviewing files from May 24th. So files that were submitted to CalHFA from May 24th. So you think about it, they're about a week late, you know, they're a week behind because we're already May 30th. Then also here, you can look at today's rates. Rates are posted every single day from Monday through Friday. If it's a holiday, you will not see a rate posted on there. Also, here's the loan scenario. And then all you got to do is just fill this out. You know, so is the borrower a first-time home buyer? Are they eligible for disaster victims? Is the borrower qualified for Section 184? Does the borrower earn less than 80%? This is for conventional. I'm doing FHA. And then you just put in the county, because remember, your income is going to be based on the county and the purchase price and all that stuff. You know, we'll say Riverside County, purchase price, we'll say 500,000. Credit score, we'll put 660. You can do a single family, a condo, or a manufactured home. It has to be one unit, not a duplex, triplex, or fourplex. It has to be one unit. Closing cost, what I put on there, it's 5%. Why? Because in order to do a CalHFA, you got to charge the client 2 points, up to 2 points, and they're going to give you 3. So I put 5% just so that way we're not under, you know, we won't tell them that it's a certain amount and then it's actually going to be more. And then if you go down here, we'll do FHA. This is optional information. Current rates, I think it's 6.75, but you go here and you look on the rate, 6.75 for today. Okay.
Question, Millie. What is Cal Plus loan?
So, okay, so we're going over the CalHFA right now, which comes with the My Home. So if you go under the rates, I'll show you here really quick. So if you go under here, FHA or even conventional, but if you notice CalHFA for FHA loans, right now they're only offering the My Home, okay? You can do the Cal Plus FHA with 2% zip, or you can do the Cal Plus FHA with 3% zip. You could get up to 3 loans for the client, okay? However, right now, it's not available. So that means the only one that's available is the My Home, okay? If this would be available, the 2% or the 3%, it means that the client can get 2 or up to 3% in help for closing costs, okay? So the client will have 3 loans. There's an interest rate for a My Home, which is 1%, and there's a 0 interest rate for the zip. Okay, does that make sense? So for the zip, if they borrow $10,000 when they pay it, which is when they refinance, when they sell the home, or 30 years from when you close the loan, or whenever there's any changes to title. If you have any change to the title of the property, it's going to trigger the clients to pay the second loan, the third loan, or how many loans they have. Does that make sense? So always make sure you let them know that, because that means if they buy the home, let's say they're single and they buy the home as a single person, and then they get married and they want to add the wife or the husband to the title, it's going to trigger for them to pay that loan off. Okay. So, and if they're currently married, always if the person is not going on the loan, they cannot be on title. So make sure you let them know ahead of time, and they cannot be added on title because then again, it's gonna trigger that information. It's gonna trigger the information. So let's go back here. So if you notice Cal Plus loan, there's none available, right? And it's gonna tell you right here, just as we looked at the rates. So there's none available. So what are we gonna do? We're gonna go here, calculate results. And it's gonna give us this first scenario. If Cal Plus would be available, then you can add a scenario, add the second loan, and then whether it's 2%, and then add a third scenario showing the 3% zip loan. Okay, so you can show your client all three scenarios. But on this scenario, it's basically, you know, it's telling you what the base loan amount is going to be, total down payment requirements, and what the monthly payment is going to be. Okay, so unfortunately, you know, as of today, you know, it's the Cal Plus is not available, which is, you know, not good. Usually the 2% is available, but right now the 3%, the 2 or the 3 is not available. So we'll go to number 3 here. So another thing, I'm going to share the screen. I don't know how to go back. So I'll probably do here. So anyways, when you're here on CALHFA, you can also check your income limits, okay? Income limits, it's going to tell you how much the client can make. There you go. So for Riverside County, it's 173,000. It's pretty high. San Bernardino, there's San Diego County, which is higher, LA County, Orange County. Are you guys still able to see all this? Yeah, okay. So you can play around with this, you know, with this tool. Here's for home buyers, all lenders. You can also do trainings, marketing training. There's plenty of videos where you can go and watch some videos. There's loan program information, meaning your handbooks, with your guidelines. If you have a question on like, what's the credit score needed for this type of program, you can always go on the handbook. Forms and tools, this is for all marketing information. You can do marketing materials. You can print out flyers. So the flyers are already created and you can just fill out your information and you can post. Okay. And they do a lot of different, not just for home buyers, like to buy a house, but like a regular house, but they do the 203K, they do VA, they do USDA. And then you have other materials as well. Like see 5 easy steps to buying your first home flyer. They have them in English and they also have them in Spanish. All right, so let me go back here. Okay, now we're back to this thing, to what I created, and then we'll go to the second page. Again, we just went over the rates. So the rates are posted every single day, Monday through Friday. We need to lock before 2 p.m. So when when you have a loan in processing, you want to lock that day. If you look at the rate, just make sure you lock before 2 p.m. You don't do the locks. This is something that you will let your processor know, to lock the loan. Again, just put a little requirements here. They got to be a first-time home buyer, needs to be under income limits, has to be a 1 unit, and they also need to take a class. So there's a link, and again, you can find it on, on the CalHFA website. There's a link that the client has to go in. It's $99 for the class, and they have to take the class. It's an 8-hour class. After they're done with the class, they need to call the number that's listed on there, and they do like a verbal quiz, we could say. And then after that's completed, then they will receive a certificate, and that's the certificate that you're gonna need for your loan, okay? Any questions on the GSFA? I mean, on the CALHFA?
For now, no.
You good? Okay. Cindy, do you have any questions? I know you wanted to, or was that too fast, or is it like?
No, I think I'm wondering if we can clarify if the 2% and 3% were available, what does that do for the borrower? It just, so you're getting a second and a third?
Correct. Yes.
Okay.
So basically your client, does a purchase price of 500,000. And so your My Home, it's based on the purchase price. So they're going to get 3.5%, right? If we're doing FHA, they're going to get 3.5% of the 500,000. That's going to be their second. And then the third, it's going to be either 2 or 3% based off the loan amount. Okay. Off the total loan amount, not the base loan amount, but total loan amount. It's including your FHA premium. Does that make sense? Your insurance premium.
Yeah.
So an example would be if they're buying a house for 500,000, your 3.5, they're going to be getting a second loan for 17,500. Okay. Now, if the total loan amount is, let's say, 485, okay, they're going to get, if they go with the 3%, they're going to get an additional loan for 14,550. So an example, and this is just an example. When I was doing both loans, when I was just doing the My Home, the client has to bring in about $15,000 to $17,000 based on a 450 purchase price. Okay. That's including closing costs, down payment, everything. So it's good compared to a regular FHA. They have to bring in anywhere from 28 to 30,000, correct? So it's almost half. But the minute I included the 2% zip, they would bring in about $7,000 to $8,000. If I did a 3% zip, they would bring in about $5,000 to $6,000. So when the 3% was available, and the sellers were also crediting the clients, $5,000 for closing costs, I had a few transactions where the client did bring in $0. So the client, when they open title and escrow, they would give their escrow deposit of, let's say, $5,000. Well, when we closed the transaction, they would get their escrow deposit back because it was not needed. So all they had to pay was just pretty much the appraisal, so it is, I love this program, because it's, the rates are lower. We could say the interest rates are much lower. You don't have to pay a second unless you sell the house, you refinance, or there's any changes to title. Same thing with the second or the third. There's no interest rate on the second or the third. So if you get 14,000, that's how much you have to pay back. So that's that's what I like about the CALHFA. The only thing is, you do have to be a first-time home buyer. Here's another a pretty cool thing which I found out, especially in the Hispanic community. A lot of us think that adding our kids to title is going to help them. But sometimes it doesn't help them because technically we're saying that they own a house, right? But with CALHFA, as long as you can prove it, if you can prove that they did not live in the property or they only co-signed, that they didn't make any mortgage payments, then they would still qualify for another CALHFA. So that's pretty good, But again, it would just require for you to get more paperwork or document a little bit more, but at least you can help a student that already graduated. Now they're looking into buying their home. They could still qualify for a down payment assistance program. Another nice thing about CALHFA is, one of the things is you got to bring in less money. A lot of agents know about it, so they're not as scared of this down payment assistance program because they know that you can close it within 30 days and you can close the file within 30 days. There's a lot of speculation that down payment assistance programs take 45 to 60 days. CalHFA, it's pretty smooth, pretty fast. Okay, so now we're gonna go with the GSFA. So the GSFA, it's another state-funded down payment assistance program. This way, if you go here under gsfahome.org, again, it's going to give you information about it. There's some requirements. If you're doing a GSFA FHA loan, there is no income limits, okay? You do not need to be a first-time home buyer. And you can have up to 2 financed properties. What does that mean? That means that if you have a client right now with a GSFA loan and they want to buy a bigger house or a house closer to their work, or maybe downgrade from a 2-story to a 1-story because they can't go up the stairs anymore, they can buy another property using the GSFA program. Okay. They can leave their other house rented. They do follow FHA guidelines, conventional guidelines, but they could have up to 2 financed properties. So this is, you know, it's good for anyone. Credit scores are pretty low. Let me see. Correct. So you can go, let me go to the next one. Oh, I'll stay here. So again, I'm gonna see if I can share the GSFA website. They did make some changes to it. Hold on. All right, let's see, new share. All right, so this is the GSFA. And again, you know, you can go to programs, down payment assistance. They have platinum. So a lot of, you know, you're gonna probably hear a lot of marketing about, hey, if you're a first responder, did you know that you qualify for a down payment assistance program? So yes, the short answer is yes. However, the way they have it set up is, again, personally, I don't like it just because even if they're like part of the first responders team, whether they work for a school or they're a sheriff, a police officer, they still have to pay a monthly payment on the second loan. Do you know what I mean? However, they will get a little a grant that will be forgiven right when they close the loan. But it's just it's only 1.5%. Let me see if I can go to the GSFA rates just to explain a little bit, because it might look a little confusing. So I'm going to share this screen with you guys. So again, with the GSFA is the same thing as the CalHFA, where the rates are posted online. So whatever you see here, so whether we do the loan or another lender does the loan, they're gonna give out the same rates, okay? They have them separated. They have the FHA, USDA, VA, so all government loans. And then they have Freddie Mac. So GSFA goes off Freddie Mac, not Fannie Mae. So here are the rates. If you can see the standard, assist to own, and select. So here's the rate. So if they get a rate of 6.5%, they get 0% as a down payment. Help. See? CPA second, 0. If they go with a 6.75 rate, they get 3.5. If they go with a 7.25, they get 4%. Okay. And the way that GSFA helps with the down payment, it's based on the loan amount, not based on the purchase price. And then same thing here. So then this is for Freddie Mac. And if you notice how it says 80% and below or 80% AMI or above. So the rates are different. But the income limits, here's for conventional, you do have income limits. And again, you'll be able to see those income limits when you go onto the website.
Melly, quick question.
Uh-huh.
For this one, we're still charging 2% for the GSFA?
Yes, so same
Okay.
thing for the GSFA, we still have to charge 2%. So again, that's the other, negative thing about it, because if they're getting 3.5% and you're charging 2%, basically they're only getting 1.5%. And that's why the clients again have to bring in about, for this type of loan, they have to bring about 17,000 as well, depending on how much money you get. All right, so let me go ahead and share this other screen. But again, the programs are there available. Some people, whether, if I don't like it, I mean, some people might like it because again, you don't have to be a first-time home buyer. You could buy up to two units with this program. So that's another advantage to it. It does not have to be a single family residence. It doesn't have to be a 1 unit. And then here's the Platinum Select eligibility. If you remember seeing on the rates, it had something about select. So for those type of rates, it's only for medical healthcare workers, law enforcement, anyone a teacher or a school administrator, whether it's private or public. So anyone that works for a school, it could be the janitor. Same thing, medical field workers. It could be someone that works at home providing IHSS help. They could qualify for this program. Or anyone that cleans the medical buildings. As long as they have a badge and we can document it, then we're good. Okay. And then here's where you could go to look at the rates where I showed you guys. And here are some highlights about this specific program. You only need a minimum credit score of 640. Your debt ratio could go up to 50% with a credit score of 680 or higher. You may buy up to 2 units. There's no income limit on FHA. Conventional does have income limits. They follow Freddie guidelines. Can be closed again in 30 days. There's no home buyer class if you're doing a GSFA FHA. But if you're doing a GSFA conventional, you do have to take a class, and the class has to be from the specific company. I believe it's like Framework or something like that. But again, you will find all that information on the website. Do you guys have any questions? Good. So again, this is based on the CALHFA and the GSFA. They're both state programs. But always check your guidelines, as the programs and guides could change daily. If you notice right now, the CALHFA, they're not offering the 2 or the 3% zip. So if you had a pre-qualification on a client and they were getting, the 2% zip, they would not be able to get it right now. But you can always check it daily. Those things change daily. The rates change daily. The interest rate on the CALHFA 2 weeks ago, I believe, was at 6.25%, and today it's at 6.75. All right. Any questions? We're good. All right, perfect. So again, I'm going to go ahead and upload this training to YouTube. And just what I did on yesterday, I sent you guys, this printout. So you guys could have it there, and also the link to the video so you can watch it another time if you guys need any help. Always email me, let me know if you have any other questions. I'll be out of town for a few days. Let me go ahead and. But if you have any questions, feel free to call me, text me. I'll still be available.
Thank you, Meli.
Right.
Thank
Thank
You're
you.
welcome. You're welcome. All right, guys, have a good day.
you
too.
too. Take care. Bye-bye.
Uh-huh.
Bye.
Bye.